Hello. You're gonna be on my live if you walk in. I just started.
Okay, sorry.
Sorry. Hello. You almost saw Sarah, but then you didn't because she ran away. Good morning. Good morning. Hi, everybody. I'm just gonna wait for a couple more people to join. In the meantime, before I get started, anyone who's planning on staying here for a while, if you'd smack that screen a whole bunch of times, someone hit it 4 times, you gotta hit it more than that. If you smack that screen like 30 seconds in a row, it brings in a lot of traffic. You could see there was 4 likes and there was like nobody in here. Now there's 60 likes and 80 people in here. Hello, if you are investing in NVDA, I was going to get stock today. I bought stock in October of 2022, so I bought it when it was $125. I have not purchased NVIDIA since it was $400. I do something called averaging up. You guys often hear of something called averaging down, or people say buy the dips. I buy into strength. I buy into confidence. So I purchased NVIDIA at 125, then I bought it at 120, 110, then it started going up. This was in 2022. I bought it at 154, 226. This is now in 2023. 226, 389, 360, 455. Then it dropped and I bought more at 413. Then it dropped even further and I bought more at 380. Then it went back up to 400 in December of 2023 and I bought more. So I've purchased NVIDIA. The last time was December 2023 when it was $400. I have not purchased any more NVIDIA since then. My total position, my total average cost is 170. And I have no plans on buying any more at the moment, but I do still think it has a lot of room to the upside. I just don't want to average up into something that's now $800 or now $900 a share. My feeling is NVIDIA will probably hit 1,000 before it corrects. I also think that NVIDIA will probably hit 1,000 or 1,400, which is their 1-year price target. And then rumors will start circulating about a stock split, which I think would happen eventually. Good morning. Hello, 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 hello. Every John, Jack, and Sally mentioning NVIDIA now, it's going to crash to the core. No, it's not going to crash to the core. It will pull back at some point. But, at what point? Like, I had people telling me NVIDIA when it was 400 that it was going to crash. When it was 500 that it was going to crash. When it was 600, I'll wait for it to go back down to 400 to buy. Then when it was 700, I'll wait for it to go to 500 to buy. Then when it was 800, I'll wait for it to go to 700 to buy. Now it's 900 and people say, I'll buy it at 800. It could happen. At a certain point, it could hit 1,200 and then drop, and then someone will say, I'll buy it when it gets to 900. And that might happen. But there's no real way to know. There's no real way to know, but it will not crash to the Earth's core. It is too profitable. It is too successful. There's too much, their forecasts for the future are only very promising. So there's no reason for it to crash other than if all the hedge funds suddenly said, oh, wait a minute, this company actually sucks, which it doesn't. So will it pull back? For sure. Especially because everyone is talking about it, but you don't know when and you don't know how much. Can you take a look at NTR? Started laddering in NTR. I'm trying to keep also like I'm going to start doing on on YouTube those like timestamps for things. So I can tell people like, jump to this point in the video. Nutrien, I've never heard of. It's down 34% last year. Let's see here. It's down 34% last year. It's up 1% in the last 5 years. It hasn't been public for 10. It's down 4% since going public. Year to date, it's down 5%. Their grades are mostly terrible. It has a valuation grade of B+. It has a growth of D-. It has profitability of A+, which is very good. Momentum D+, revision D+. They have a 4.12% dividend. And they have a dividend safety grade of B-. And they've grown their dividend 5.4% in the last 5 years, and they've had their dividend for the last 5 years. They are a fertilizer agriculture. Okay, that's interesting. And let's see here what Wall Street has to say about this company. There are 27 analysts covering the stock with an average, I would say, moderate buy rating. Nine strong buys, 8 holds, 2 sells, 0 strong sells. Kind of interesting, and it has a 1-year price target of $68. That's 21% upside from here if it were to happen. I'm also going to read every comment in order. When I get to the bottom, I'll scroll back up and I'll read the next list until I get back to that one. SMCI, I've talked about. There's a video that I posted a few days ago. You can go check it out if you want. Jacob is asking if I ever succeeded in pro wrestling. No, I broke my back on the very first day of class. What do you think of Walmart? I like Walmart. Their split was a few days ago. Their 3-for-1 split, so now it's in the 50s. It's 60 right now. They have a 1-year price target of $65, which is around 7% from here. But there are 42 analysts covering Walmart. 42 covering Walmart. 23 strong buys. That's a lot. 12 buys, 6 holds, 1 sell. And I said the average price target was 65, but the highest price target is 76, and the lowest is 50. What do you think of... oops, I missed it. Let me scroll back up a little bit. What do you think of Oprah? O-P-R-A? Never heard of it. Opera Limited? I have no idea what this is. Application software. It has a strong buy from Wall Street. 5 buys, one regular buy, no holds, no sells. It's $13. This year it's up 53%. In the last 5 years, it's up 100%. It hasn't been public for 10 years. It's up 17% since going public. The revenue's been really, really strong. Really strong from, let's see, 2020, 165 million, 2021, 250 million, 2022, 331 million, 2023, 396 million. So it's growing. What do you think of Tesla? I think they have a lot of competition. And I think that's going to eat into their massive growth that they used to be so well known for. The stock is down almost 10% in the last 12 months. It's down 30% this year alone. It just keeps going down, and eventually Elon will he'll post some tweet or he'll make some announcement. I think that their days of massive innovative growth are done, at least for now. They're just going to focus on doing their thing, building their cars, whatever. There was a big article that came out yesterday with Donald Trump saying that, let me see here, Trump has promised to roll back all new car pollution rules at the EPA that could require electric vehicles to account for up to 2/3 of the new cars sold by 2032. Biden's electrical vehicle-related policies are the death of the U.S. auto industry, according to Trump. And he says, on day one, I will terminate Joe Biden's electric vehicle mandate, and I will cancel every job-killing regulation that is crushing American workers. So this is going to punish Tesla stock, any electrical vehicle stock that you own, any charge stock. This is something, by the way, we've been talking about in my live when people have said, what do you think of this electric? What do you think of that electric? I said, it's all eyes on the election, because Biden has this green agenda and Trump does not. So if you are heavily invested in these companies, it is something you need to be very cautious of, especially the higher risk ones. Tesla is probably going to be fine, but the smaller ones like the Rivians and the Charge Points and the Neos and stuff like that could be impacted pretty significantly. I know Neo is a Chinese company, but if they were to ever come here, could be rough. So I think Tesla's days are slow for growth, but I don't think it's over. I think it's just they're going to readjust and be fine. Thoughts on SCHD? It is the highest rated dividend ETF on the entirety of the markets. You can't go wrong. I mean, it's down a little bit this year, but that makes sense when you look at what's booming. It's tech. Tech is going up like crazy. No one's gonna put their money in a 3 or 4% dividend ETF when they could go in NVDA and be up 80% in a couple months. SoFi, I just posted a video about SoFi a few days ago. I think it's in the Stock Fight playlist under SoFi versus New, the Brazilian version of SoFi. Trap and Hype says, what's your thoughts on iBit? Honestly, oh wait, we just talked about Tesla for a while and I didn't even say anything about it. The IBIT ETFs are odd to me because why not just buy the Bitcoin? These fees, the iShares Bitcoin Trust has a fee of 0.12%. So it's very, very minimal. But at the same time, if you had 10,000 invested, it's only $12. So it's not a humongous fee. But at the same time, why pay a fee when you could just go and open a Kraken or crypto or Coinbase account and buy your own Bitcoin and pay no fees and have it yourself? So I think this is something mostly for the pensions and the hedge funds and stuff like that to diversify their holdings and just buy it and make it easier than having to manage their own crypto. I would personally just buy Bitcoin if it was me. Where do you see Tesla at by December? You're asking me to make a guess, and I don't really do that. The analyst 1-year price target on Tesla is 211. That's up 20% from here, but the analysts are always readjusting their price targets. I'm 26. I have almost 500,000. What should I invest in? If you have $500,000 and you don't know what to invest in, it might behoove you to hire a financial advisor or just watch my pinned video on investing for beginners. If you're new and you don't know what to buy, just play it safe and get the boring old index funds. I've never heard of Ben Dog. It's fertilizer. Yeah. What are your thoughts on Apple right now? So, this Huawei, I don't know how to pronounce it. I should probably learn how to pronounce it. Apple saw their phone sales drop 24%. Now, on the surface, you read that and you think, oh my God, it's all over for Apple. Their phone sales are down 24% in China, and this competitor comes in and crushes them and sold way more phones. This is the death spell for Apple. It's all over for them. But when you read a little deeper, Apple told you this was going to happen last year because of COVID and supply chain issues. They knew this was happening, and they warned you this is happening. So I guess part of that can be blamed on the fact that people needed new phones last year, and they couldn't get their hands on an iPhone in China because of supply chain issues, so they went to this competitor. Now let's see what happens going forward. I would never personally bet against Apple. What do you think of Fizz, National Beverage? I've never heard of Fizz. I've never heard of Fizz. Let's see here. It's up 9% year to date. There's no dividend. It has a strong sell from Wall Street. Their grades are surprisingly very good, though. Growth B-, profitability A-, momentum Momentum B, revisions A+, valuation is a D-, so it's very overvalued. Let's see what their drinks are. Oh, LaCroix. It's literally just all LaCroix, Everfresh, Shasta and Faygo. I didn't know that. That's kind of funny. They're Clear Fruit, an energy drink, and something called Rip It. I think this is a hard market to break into, and I think they basically have their core customer base now. They're not going to be like a massive growth company, and you can kind of tell by their revenue. Going all the way back to May of 2020, $1 billion in 2022, $1.07 billion in 2022, $1.14 billion in 2023, $1.17 billion. They're projected to do $1.19 billion in 2024 and $1.21 billion in 2025. So not a lot of growth. It's just pretty consistent. And with consistent growth like that, you would expect a dividend, which they don't pay. So, modest growth. Let's see. Over the last 5 years, it's up 66%, 68%. In the last 10 years, it's up 500%. But 10 years ago, it was this new innovative company, and LaCroix, and the flavors were so good. Now they kind of saturated their space. Let's see what we got. Where can I find or do your own research guide? You can find it on my website. My website is kennethsuna.com. It is my personal website. Man, I missed a lot of comments here. I see someone asking about CAVA. I'll get to you in a second. I kind of go like comment by comment. Go to my website. It's kennethsuna.com. Click on the menu, and you'll find the free resource guide. It's totally free. There's no strings attached. There's no PayPal or Venmo to unlock it. There's no Patreon to sign up. There's no email list. I'm not going to spam you with emails. You just go on the website. You can get it all. It's there for free. What are your thoughts on Apple right now? I just answered. Apple was talked about at the 11-minute mark, so you can go and re-download this live. I'll download this live and post it on YouTube later today. And at the 11-minute mark, we talked about Apple, so you can go and watch it. DraftKings plus Fubo. I don't have Fubo, but I do own DraftKings. Sports betting is going to be big. Sports, Fubo. Man, I didn't know Fubo was $1. It's down 46% this year. Yikes! They were doing so well, I thought. Yeah, during COVID, they hit $50. They were even higher. What was their high? I want to let me see. Well, it was almost 50 or $60 per share during COVID, and now they're $1. That's bad news. I would stay away from something that's fallen that hard. Put all my savings into SHIB. Okay, good luck. What are your thoughts on Apple? We just talked about. Do you invest in some dividend stocks just for the dividend with no growth but a good dividend? Yeah, I mean, some people call that a value trap where you put your money and you never really see it back other than the dividend. The other takeaway from that, I guess, would be for passive income. Maybe you would just take the dividend. If the stock relatively remains constant, it doesn't go up, it doesn't go down, you could just take the dividend, especially if it was a high dividend. Like, for example, like Altria. Altria hasn't really moved much in a decade. Let's see. In the last 10 years, Altria is up 14%. That's nothing. But their dividend is 9%. So you can stack a pretty large portfolio by reinvesting the shares, earn more money, and eventually say, don't reinvest the dividends anymore. I want to take that Altria cash and either live off of it or use that money to buy other investments. Does it cost money to buy Bitcoin? Yeah, I guess maybe it does. Maybe that's an incentive to maybe then buy the IBIT ETF. That's a good point, and that's something I didn't think about. I don't know the commission fees for crypto brokerages because I don't really trade crypto very often, so I forgot. But they might. Oh, I see here. Someone is saying Coinbase has a free to trade. Some people can buy ETFs for free. All right, well, then you got your answer. Ray is asking, what about CAVA? Let me go and add to my notes here that we talked about Bitcoin again at the 18-minute mark. I'm trying to do that timestamp thing on YouTube so people can go back and watch what we talked about and when. Ray wants to know why CAVA. So for me, we're not currently home. We're dog sitting. But if we were at home, I would open this side of my desk drawer and pull out my wish list from 2008. In 2008, I wrote down every stock I wanted to buy, but either didn't have enough money or enough confidence in the markets or enough knowledge to know that it was the best opportunity of my life. So I wrote down a list of companies. I bought a few. I didn't buy all. Really stupid. One of them was Chipotle. It was $38 a share. I wanted to buy Chipotle stock because I ate at Chipotle and I liked Chipotle. That was my only reason. I didn't know about balance sheets. I didn't know that they were a disruptor, the fast casual. I didn't know anything about the terms and price to earnings. Didn't know anything. I liked it. I wanted the stock. By the way, same reason for these. WWE, I liked it. I wanted the stock. Apple, I liked it. I wanted the stock. Meta, I liked Facebook. I wanted the stock. Netflix, same thing. So CAVA comes around. It's 12 years old now, the restaurant, but they only went public last year. I eat at CAVA twice a month, and I love it. When they said they were going public, it was a no-brainer. They also only put on 117 million shares, and if they don't add more shares later, which I hope they don't, I don't want them to dilute their shares, they could be the next Chipotle. Chipotle has 27 million shares on the market, so way less, which creates way more demand. Most people buy and they hold. There's not a lot of desire to then sell this stock. They treat it like, like a savings account, like a long-term investment. They buy it, they hold it, they're not selling it. Although there are occasions where people did, like when they had that salmonella outbreak and it went from 700 to 300. And that also would have been a prime opportunity for me to buy some stock in Chipotle, but I didn't. So CAVA, that's why. I love it. I go there all the time. They have a rapid plan to expand, but it's not out of control rapid, and I like it. And that is why CAVA. I needed this on my feed. Leon or Lions, thank you so much. I'm glad to be here. Do you trade shares only, or are you doing options? This is for Z. No options. I don't trade options. I lose my money 90% of the time. When I trade options, I lose. So I no longer do it. You stick to what you know, and I know stocks, and that's where I'm comfortable, and that's what I've done for the last 13 years. Every once in a while, I'll buy a call on something. 90% of the time, I lose all my money and I go, well, that was stupid. Why do I keep doing this? The only options that I buy are leaps, which are very long term. They're like a year, 2 years out, or when I sell covered calls to generate my own premium on shares that I own. But I don't sell covered calls a lot because I bought my shares at really low price points. Some of the stocks here, I bought NVDA, say for example, at 125. I don't want to sell a covered call against NVIDIA. First of all, you need 100 shares to do it. Second of all, you lose your cost basis, your original purchase price. I bought it at 125. So if I sold a covered call and I made $1,200 or whatever, cool. Except now NVIDIA is $900. And if I wanted to buy back the same amount of shares that I had when it was 125, it would cost me a fortune. So I don't do it for some stocks. I do sell covered calls if I'm planning on selling a stock anyway. Let's say I have a company, 100 shares of Microsoft, and I go, I don't know, I think Microsoft is I'm using Microsoft as an example because I sold my Microsoft a couple years ago to buy NVIDIA stock. So if I was planning on selling Microsoft anyway, then I'd sell the covered call. If I'd make the premium, if the shares got called away, no big deal because that was my plan. I was going to sell them anyway. And if my shares didn't get called away, then I'd sell them on the markets and whatever. Can you please review Cintas? Let's see here. It's STAS. STAS. It's $628 a share. It's up 44% last year. It's up 4% this year. In the last 5 years, it's up 210%, which is a lot. In the last decade, it's up 970%, which is huge. They pay a get out of here. I don't go live with people I don't know, so get out of here. They pay a 0.86% dividend, so under 1%, although it's $5.40, which looks nice. Hey, $5.40, but it's under 1%, number one. Number two, in order to make $540 a year from their dividend, you'd need to own 100 shares, which would cost you $62,814. Their grades are fantastic almost across the board. A B for growth, A for profitability, B plus for momentum, A minus for revisions, F for valuation. That's the only bad grade that they have. Let's see here. I would imagine they have a dividend safety grade of A plus, which they do. No surprise there. They've grown their dividend 20% in the last 5 years, but still it's under 1%. Let's see here. Wall Street 1-year price target for Cintas is 617, which it's already surpassed. Their next high price target is 700. Penny's point of view, what kind of trading? Swing trading. It's all swing trading for the most part. I started... This is getting kind of annoying. This is what I'm doing, by the way, for anyone who wants to know. I'm making a little timestamp of every stock we talk about and at what timestamp, so I can later go put it on YouTube and say like, oh, we talked about Tesla at the 8-minute mark. So if you want to learn about Tesla, go to the 8-minute mark. Anyway, I started stock trading 13 years ago. I was working minimum wage jobs in the restaurant industry, in the fitness industry. I hated it. I think Robin is coming to say hello, so let's flip the camera. Oh, nope, she's walking away. She really hates the camera. Bye, Robin. We're dog sitting. I was working minimum wage jobs. I didn't want to do it anymore. I didn't know what I wanted to do with my life. I was looking at the membership consultants at my gym, thinking maybe this is what I'll do. And by the way, like I said here, I didn't go to college. I wanted to be a pro wrestler. And this was not the path I saw myself going down. You know, when you dream of being a pro wrestler, then to sell gym memberships, not that it's bad, but it wasn't what I had wanted. And I was like, man, what am I going to do? Is this my life? Like gym memberships? Maybe I'll be the general manager one day of a gym. I don't know. And I would talk to them and I'd say like, hey, do you like this? And they would all like, one of them was like on the verge of tears every night when he left. He hated it. He wasn't good at sales and the manager let him know it. Hey, Robin, quit it. The manager let him know it every single day. The manager was like, you suck. Anyone could do a better job than you. I could do a better job in my sleep. and just made him feel like shit. And I was like, this is not what I want to do. So I started to learn a little bit about the stock market. I was always interested in investing. And hi, Robin. There she goes. Bye, Robin. I was getting interested in the stock market and investing, and someone at my gym was very into trading, and he was like, oh, you should go home and you should buy all these stocks. And I listened to him like an idiot, and I went and I bought all the stocks that this guy was recommending, and they were garbage. They were all penny stocks or highly speculative stocks. I put in every last dollar that I had. I was living at home. I was making good money, so I had a lot to invest. Man, I flushed all that money down the toilet, and I was like, oh my God, I can't believe I listened to this moron. And I lost all my money. And I thought, well, if I knew what I was doing, maybe I could make money doing this. So I read a couple books. I learned about swing trading, and that's what I do. When Trump got elected and the market started going like this, I said, oh, I'm not swing trading. One tweet can send the markets up or down, and I don't want my money tied up in anything too crazy. Plus, we had COVID, and there was a lot of uncertainty going on. So you add that into the mix, and I was just like, I don't like the idea of buying a stock and holding it for 3 weeks in volatile times. Maybe I'll start day trading. And day trading really worked for me. So I day traded for that period. Now that things have kind of cooled off a little bit and the markets are just kind of like steadily going up a little bit, swing trading is back to me. I haven't really made too many trades though this year because I'm a full-time content creator on TikTok. SoundHound AI thoughts, NVDA invested. Kevin, I posted a video on SoundHound. I posted 2 videos on SoundHound actually in the same period of time, right when their earnings were coming out and NVIDIA was coming out and announcing that they had made this trade. And I was saying, like, look, just because NVIDIA made a very small, it was like a $3 million investment. For NVIDIA, that's a drop in the bucket. So NVIDIA is viewing this as a speculative play. You should do the same. If NVIDIA is only NVIDIA is what are they, $2 trillion? Let's find out. NVIDIA is a $2.18 trillion company. So a $3 million investment to them is like nothing. If they lose $3 million, no big deal. They just shrug it off and they go on about their business. So I would encourage you to do the same. Number one. Number two, the announcement that they got into the stock came out right before their earnings were coming out. This is for SoundHound. So a lot of people on social media were connecting dots that weren't really there. And they were going, oh, NVIDIA purchased it and their earnings are coming out. NVIDIA knows something that we don't know. No. Coincidence. Earnings come out 4 times a year anyway, so you can always say, oh, they bought it before the earnings. They were just buying it as a way to diversify their portfolio, get into AI and whatever SoundHound does, and take a small position. Earnings came out and the stock went down 20%, and I think it went down another 20% the very next day. It's up 12% today. But just be cautious when you're copying what larger people are doing, Nancy Pelosi included. Syntax we just talked about. It was at the 23-minute mark. See? So I'm going to download this live. I'm going to put it on YouTube later today. You can jump to the 23-minute mark of this live on YouTube, and it'll be on Syntax. How many shares of SoFi do you own or should you own? I can't tell you. That's up to you. SoFi is speculative. Right now they announced that they were doing $750 million of some sort of convertible note. That freaked out Wall Street because it made Wall Street think, they need to raise money. They don't have enough money. Oh no. The last time they did this, by the way, the stock tanked and then went right back up. But how many shares should you own? Nobody on TikTok should tell you how many shares you should own of anything. I don't know you. I don't know your risk tolerance. I don't know your portfolio. I don't know how diversified you are. I don't know if you make a lot of money or you don't make a lot of money. If you don't make a lot of money, you shouldn't be trying to get rich quick on stocks. You should be putting it in index funds predominantly. If you really liked an individual stock, make it a very small percentage of your portfolio, especially something volatile like SoFi. Please, MNMD. MNMD. This is, are we sure we have the right symbol here? MNMD. Mind medicine, got it. I was typing it in wrong. It's like when you lose your remote and you turn to your girlfriend and you say, where did you put it? But you were the one who put it somewhere. Mind medicine is up 63% today. Look, when you see a stock that's a penny stock or was a penny stock, look, let's see. It was $4 a couple days ago. It was a penny stock. Anything under $5 is a penny stock. This stock was $5 a few days ago. Now it's $9. I don't know why, but usually when you see a stock shoot up like this, especially this one, they're in pharmaceuticals, it's high risk. You're chasing something. Usually what new investors do is they see a stock that's cheap and it's up 64% and they go, damn it, I missed that 64% run. If I buy it today, I'll catch it on the next 64% run. That usually doesn't happen. Usually what ends up happening is it dumps the next day, or a couple days later it sells off, and then you're stuck being the one who purchased it at $9 or $10. So tread carefully when you see stuff like this. If it's a company you've already been interested in and you've researched heavily, then one option would be to buy a little now and then wait for a pullback. Another would be to wait for a pullback because, like I said, it's had this massive run. It's up 172% this year already, and we're only in March. So you need to be careful when you see stuff like this. It has a 1-year price target from Wall Street analysts of, let me go and find it, $26. $26. That is a 163% move. I would still tread carefully. There are only 7 analysts covering the stock, and all of them recommend you buy it. Take that how you will. Some people say, these analysts are promoting a stock that they own, or they all own, just be careful. Straight ASF, do you believe that Apple will be hyped in 10 years? Yes, I think Apple will be doing things that we can't even imagine a decade from now. Any thoughts on Snowflake? No, not really. I don't know too much about this company. They have a 1-year price target of $214. That's a 30% move. Their internet services, technology, 46 analysts are covering Snowflake. 19 give it a strong buy, 9 give it a buy, 15 give it a hold, and 3 give it a strong sell. That gives it an overall buy rating. And like I said, they have a 1-year price target of $214. Their highest price target is $600. That would be incredible. I would be very surprised if that happens. PLTR is a good long-term one. I agree. I own Palantir for the artificial intelligence aspect of their business, and the government contracts give me kind of peace of mind that they're going to have some level of stability coming in. Oh, by the way, let me just make a quick little note here. There's yet another congressional hearing on banning TikTok. They're saying now that ByteDance has to divest TikTok from their business and sell it to an American company, or else TikTok is gone, banned. They're giving them an ultimatum here. I think, who knows what could happen. Please go follow me on Instagram. Please go follow me on TikTok. It's the same name, Trade Invest Simplify. On Instagram, it's Kenneth Suna. On YouTube, if you click on my bio here on TikTok and you click on the Instagram or the YouTube logo, both links will pop up. Go and follow me there. This happens every couple of years. Trump said he was going to ban it. He never did. This year they're saying they're going to ban it again. Who knows? Better safe than sorry. If you like my videos, you like the content, go leave this live right now. Hit the Instagram account. Come back. I'll be here until 11. And we have from Dylan, 900 for NVIDIA. Glory to the shareholders. You got that right. It's a great day for NVIDIA shareholders. I talked about this a little bit earlier in the live. Actually, I talked about it right at the beginning of the live. There were so many people who were saying, oh, NVIDIA, it's $400. I missed my chance. I'll buy it when it's $300. And then it went to $500. They said, I'll buy it at $400. When it pulls back. It went to $600. I'll buy it at $500. It went to $700. I'll buy it at $500. People keep waiting to get in. Eventually, someone is going to buy at the top, and then it's going to dump. There's no way to know when that's going to happen, but my approach is I'm buying and I'm holding the stock for the next 10, 15, 20 years. I purchased NVIDIA in 2022 and 2023 in the 150s, the 200s, the 300s, the 400s. When it dipped back into the 300s, I bought more. When it went higher, I bought higher. The last time I bought it was in December of 2023 at exactly $400 per share. I have no personal plans on buying any more NVIDIA right now. I'm happy with what I have. I have an average purchase price of $170. So I don't really want to go in and average up now when it's $900. It's like when you take a ball and you throw it into the air. As soon as you throw that ball, it picks up a lot of speed until it gets higher and higher, and then it starts to slow down a little bit, and it starts to slow down, and eventually it's going to reverse course. Where NVIDIA falls, how much they fall, where they stop, your guess is as good as mine. But so far, this thing seems unstoppable. Ray, I answered the question on CAVA. We talked about CAVA at the 19-minute mark. This is coming in handy, actually. We talked about CAVA at the 19-minute mark. I'm going to download this live. I'm going to put it on YouTube. And you can go and find it later today. Jump to the 19-minute mark. Hopefully, I'll have it all bookmarked out. iPhone will always be the biggest. I agree. I work for NVIDIA. We are thrilled. That's awesome. What's your take on Joby? I would take it very speculatively. For Joby Aviation, ARC Fund, I think, is investing pretty heavily in it. New York City is talking about it. One funny thing that I saw in this article that I was reading on Trump, and his 15 things that he wanted to do. We don't talk about politics here. A lot of it is kind of like low-key terrifying. But one thing that was kind of funny and I thought was a little bit interesting is, first he says he's getting rid of electric cars. It's the death. He says it spells the death of the auto industry to have these electric cars. He will terminate Joe Biden's electric vehicle mandate. In the very previous post or thing that he says he's going to do, he's going to create new cities called Freedom Cities, and that they're going to have flying cars. And it says develop vertical takeoff and landing vehicles for families and individuals. He's not letting China lead the revolution in air mobility. Well, when I read that, the first thing I thought of was Joby. So on the one hand, he's getting rid of electric vehicles, but on the other hand, he's going to have electric flying cars, because Joby is electric. At least I believe it is. Right? They're electric, aren't they? Yeah, electric aerial rideshare. So he's going to ban electric vehicles, but he's going to implement electric flying cars. Anyway, I like Joby Aviation. I don't own it. If I were to make a position or take a position in Joby Aviation, like I said earlier, it would be the smallest part of my portfolio. Like when we were talking about NVIDIA buying SoundHound, NVIDIA bought a $3 million investment. NVIDIA is a $2 trillion company. $3 million is like nothing to them. So copy NVIDIA. When they're going into something highly speculative, they make it a very small part of what they're getting. Joby Aviation is $5.29. Are you comfortable losing $5.29? How many shares would you buy? Let's say you bought 100 shares of Joby Aviation. It's going to cost you $529. If Joby Aviation goes bankrupt, would you be okay losing $529? If your answer is yes, then you buy 100 shares. If your answer is no, then you buy 50 or 25. Or if you say, hey, I'm willing to put in 2,000, 3,000. The mistake new investors make when it comes to stuff like this is they look at speculative investments and they go, how much can I make? Not how much am I willing to lose? That's the most important question. You have to reframe your way of thinking. Instead of saying, what do I think I could make? People look at these stocks and they go, it's $5. What if it goes to 100? What if it goes to 1,000? What if, and they start getting all jammed and they take out their calculator and they start doing math really quick and figuring, if I buy 1,000 shares, if I buy 2,000, 5,000, and it goes to this price and it goes to that. It almost never happens that way. What usually happens with highly speculative stocks is it goes the opposite. You buy it at $5.29, it goes to 25 cents in a couple years, and you're going, oh my God, I can't believe I put in my whole life savings. I'm not saying it's going to happen with Joby Aviation. Your guess is as good as mine, but better safe than sorry. Apple did wrong investing in an EV car instead of AI. Yeah, but Apple, if you any company has to take risks, and no company has a 100% batting average or whatever sport analogy you want to use. They thought they were going to get into the EVs. They spent a couple billion. For them, a couple billion is also nothing. They're a $3 trillion company. They're the largest company in the world. This is a company that sits there and they go, just like what we were talking about with the speculative investing just now. They said, hey, we're a $3 trillion company. Maybe we want to get into a car. What are we willing to put in? It's like when you go to 7-Eleven and you buy a lottery ticket. You know you're going to lose, right? You know you're going to lose. So you go and you get a scratch-off ticket and you're sitting there going, it's fun to try. You scratch off the ticket, you dream a little bit about what you do with all the money, but I know I'm going to lose. $10? Am I willing to throw away $10 just to have some fun with a friend and we scratch off and talk about the cars we're going to get in the big apartments or houses? and we're going to buy in New York City or wherever we want to go and fly first class, but then you know you're going to lose. I think the same thing was here with Apple. Was they were saying, all right, let's put a couple billion into this. We'll build out a car, and then they said, you know what, scrap it. Maybe it's cheaper for Apple at this point to buy Rivian. You know, I mean, maybe Apple's going to come in and say, we like Rivian, we're going to buy Rivian. And Apple was spending, like, what were they spending? $20 billion on their car. Rivian's market cap is $11 billion. Apple could come in and buy Rivian for $15 billion and save money. So maybe Apple just buys Rivian. You know, I don't know if that's going to happen, but whatever. Straight is asking, do you believe Apple will still be hyped in 10 years? Twice, yes, I do. Someone is saying exactly they'll fix it. I don't know what that was in relation to. Amazon long term, I love Amazon. If you're going to use it, and you will still use it. Amazon Just, by the way, we put on Prime last night to watch a movie, and there were ads, and it said limited ads. Are you kidding? I thought the whole thing with Prime was that you were paying for no ads. Now they're having ads. And I think you can get rid of the ads for like another $2.99 a month. Luckily, though, the ads were at the beginning of the movie, and it was like 30 seconds, and it wasn't bad. But I was like, man, if they start running commercials in the middle of the movies, I'm going to be pissed. But one small issue, Amazon's global. As soon as I think one day soon, Amazon will announce a dividend. They've saturated the market. I don't foresee them having any sort of like massive growth catalyst anymore. They're in everything. They're in food, medicine, healthcare, music, entertainment, shipping, cloud, data. You know, they have their fleet of electric vehicles. Like, they have everything. I think at a certain point, the massive growth will kind of slow down. Their 1 year price target is 204. That's a 16% move, which is still good, but it's not like NVIDIA level growth. I think at a certain point, Amazon will have a dividend. Ray asked about CAVA. Again, we've talked about it. I've already talked about Fubo. What are your thoughts on super rich people that just started selling their stock? Super rich people are always selling their stock. It's not a big deal. Don't look too much into it. I posted a video a few days ago, actually maybe a couple weeks ago now. You can scroll down a little bit. It said the headline is something like, billionaires are selling your stocks. What do you do? Relax. They're always selling their shares. The articles that came out this year were from last year. Right? The disclosure forms usually are 3-4 months long. So when you find out they're selling their shares, it's old news. They already did it. They sold their stuff last year. Usually it's for tax purposes. Maybe they're buying another boat. Maybe they're diversifying their portfolio. In the case of Warren Buffett, he sold Apple stock and everyone freaked out. They were like, he knew. Relax. Doesn't matter what he knew. He sold because he was overinvested. He had too many shares of Apple in his portfolio and he rebalanced. And that's all it was. I wouldn't look into Tommy Tuberville. The guy's a moron anyway. I wouldn't look into him and going, he knows something. Doesn't matter what he knows. You're investing for the next 20 or 30 years. So what some politician or some billionaire did, and Jeff Bezos too, sold a lot of stock, tax purposes. He's moving to Florida and he doesn't want to pay any taxes. CAVA, we've already talked about CAVA at the 18-minute mark or 19-minute mark, so you can go on YouTube later. I'm going to download this video and put it on YouTube, jump to the 19-minute mark, and we'll talk about CAVA there. SOUNDHOUND, same thing. We talked about SOUNDHOUND at the 28-minute mark already. CAVA has room to grow. The next Chipotle, I agree completely. Bet on yourself. Your thoughts on QYLD? I like QYLD. I like QYLD a lot. However, QYLD is not a hybrid approach like JEPI or JEPQ or I believe SPYI, but don't quote me on SPYI. I know JEPQ and JEPI do a hybrid approach. In other words, part of their portfolio is buy and hold investing. So if the markets go up, the fund will go up. The other part that they do is selling covered calls. So that means if the markets are going up a lot, they're selling their options at a much higher premium, which means higher dividends for you as an investor. So you're getting the best of both worlds. A rising market, you benefit, and the higher premiums, you benefit. QYLD does not do any investing. Hey, thank you for the heart. They only sell covered calls. That means if the markets go up, QYLD is not going to also go up. They're just going to stay down here, especially because every time they buy more shares and write calls, their shares could likely get called away. So if the markets go up, they're buying it at a higher price. If the markets pull back, they're now sitting on a loss. So you're likely to not see QYLD go up very much or actually go down. It depends, right? There's variables here. They might buy some stock and their shares don't get called away. And then the markets go up for 2 or 3 months, and then you can see that QYLD is actually up a couple of percentage points, but it likely won't be as much as the overall markets. I still love it. Tony says, how do I go about starting investing? Watch all my Investing for Beginners playlist videos. You gotta be a little bit of a self-starter here. I've been on TikTok for 5 years. I have made over 5,000 videos, and I spent months putting everything together into playlists. There are playlists on investing for beginners, investing by amount, investing by age, real estate investment trust, covered call, ETFs. There is something for everybody in my playlist. So you have to watch all my playlists. You have to learn about investing. And you have to open a Roth IRA if you make under 160,000, and some people even say if you make over 120,000, just go with the traditional IRA anyway, because if you're already making 120, it's likely that you'll be getting big pay raises and pretty soon won't be able to contribute to your Roth IRA, which is a retirement account. It's tax-free. You don't pay any taxes on anything, any gains, no dividends are taxed, no profits are taxed, but there's a cutoff at $7,000 is the max you can invest. Obviously, because if it was tax-free investing with no limit, every billionaire would just dump all their money and no one would ever pay taxes. You can also withdraw the money when you're 59 and a half. Let's see here. So, those are the questions you need to ask yourself as a new investor. Billy is saying my money is getting eaten by the exchange market. I don't mess with currencies if that's what you're talking about. Average Reasonable Mom says, what is the Do Your Own Research? And hello from California. Hello back. My Do Your Own Research guide is on my website. It's just my name. It's kennethsuna.com. Click on the menu. If you're on your phone, it'll be down here. On your computer, it'll be up there. Little sidebar will pop open and you can find my templates. My Investing for Beginners Do Your Own Research guide has every website that I use to do my own research, and it's all there and it's all free. I also have a stock fight template. So if you're sitting there going, oh, I don't know if I want to invest in AT&T or Verizon. You can go on, and it's all clickable. You can go on all the websites. There are videos that show you how to do it. You can go on all the websites like Market Watch and get the fundamental analysis, the earnings, the debt, the assets, whatever. And you can fill in both yourself to do your own research, and then you can compare. That's why it's called Stock Fight. I also made a template on ETFs. So if you're interested in XLK or VGT, which are both very tech heavy, and you don't know which one to buy, you can run the template and you can figure it out. Aussies are awesome has just said, I just bought AIQ. Hey, by the way, for the Aussie guy, someone just DM'd me the other day and said, what stocks can I buy? I live in Australia, and I didn't know. So you have any words of wisdom or a brokerage that you use in Australia? Because someone asked me and I don't. I live in the States, so I don't know. AIQ is the Global Artificial Intelligence and Technology ETF. It's a very popular one here. I like the artificial intelligence ETFs because it just gives you more broad exposure. This one, for example, holds 90 companies, and you've heard of the top 10. It's NVDA, Facebook, which is Meta, Netflix, Amazon, IBM, Broadcom, Salesforce, Qualcomm, Accenture, and Microsoft. So I would wager that most people know 7 or 8 out of the 10, or even all 10 of those top 10 holdings. 68% of the holdings are in technology stocks, and 13.5% are in communications. So they're across the board, very heavily focused on tech. It's up 50% last year. It's up 125% in the last 5 years. And since going public, it is up 126%. So it's done very well. Puck Stopper says, is it too late to get into SMCI? Listen, this is a stock that was nothing, and then it was 1,000, and then it was 700, and now it's 1,200 again. I don't chase stocks that are up 1,000% in a year. I just sit back and go, oh, well, look, I don't want to be the guy who buys an $1,100 stock at all-time highs, and then it drops to 800, and that's where it settles. On the other hand, it could go from 1,100 to 1,500, but I don't want to take that chance at something that's this expensive. Realistically, how many shares are you getting? 1, 2? I would rather put that money into smaller companies that I believe have more growth going forward. And if I'm wrong and Supermicro Computer goes up another 3,000% or whatever, no big deal. I don't want to take that chance. I don't want to tie up my money in something that has gone up so much. Thanks for being you. You are appreciated. Thank you, Clay. I really appreciate it. Let's see here. We're getting close to the end of this live, so I'm going to scroll through and see what we haven't talked about. Lisa, hello, Lisa. You said only one ETF. Which one would you choose? Depends on your age, I guess. It depends on your age. I think if you are younger and you have more time, maybe you go something very heavy like VGT or XLK. It's a tech heavy one, or like the AIQ, the artificial intelligence, although that one is really sector specific. I think if you only had to pick one, I would be between something tech heavy and an S&P 500 index fund. It's just generally seen as the safest investment that has the best track record long term. And then here's the previous comment. 60% is in an S&P. Should I stick with that? I don't know. I'm not your financial advisor. I'm not a financial advisor. I posted a video a little while back. If you click on my playlist that says investing by amount, you'll see one that says investing by percentage. It's kind of a recent video, and it breaks down like, you know, how much you should be investing in each kind of category. And I had it at like 40% S&P, I think 30% a variety of other index funds, 20% individual stocks, and then 10% very high risk speculative. But you have to do what's best for you. Robbie says, please do. But I'm seeing also, this is from Bob. He's saying he's retiring in December. 40% of my money is in stable value funds. Then you might feel like you're very comfortable with what you have. And if you're retiring that soon, you might not want to rock the boat and go into things that are too volatile, like heavy tech. So maybe you are in the right position. Okay, please do STBFY. I've never heard of this. I have no idea what this is. Sorry. Do you think a correction will happen this year? And if so, how big do you think? Let's see. Do you think a correction will happen? I don't honestly, true answer, I don't care. If it happens, if it doesn't happen, affects me zero, except for if it does happen, I'll be buying a lot more investments. That's the only thing that changes for me if a recession happens, but I am not the type of investor to sit on the sidelines and go, it's coming, so I'll wait. Do you know how many inexperienced finance creators on this app who are like 20-year-old frat boys were making videos saying the market is crashing this year, last year, and I'm selling everything? First of all, the dumbest thing you can do when you're 20 is sell your long-term investments. So what if you bought it at a higher price? Just keep what you have and add into it for the next 20 and 30 years. That's the whole idea here, is that you slowly build a position. So the fact that there were multiple finance creators with a large influence, by the way, lots of followers, hundreds of thousands of followers, and they were saying, I'm freaking out and you should too. The dumbest thing you can do is sell your stocks when you're young. The smartest thing you can do, especially if you're in index funds like that sort of thing, is to just buy and hold and add when a recession comes. But don't sit on the sidelines waiting to get it at a lower price. It's stupid. Chances are you're going to miss. Chances are you're going to be wrong. And you're going to miss out. Last year, the markets went up 20-something%, and they missed out on all of that. And that's just in the most boring S&P 500 index fund. Other index funds, like tech-heavy ones, went up 40-60%. And then you had some individual stocks as well, like NVDA, that went up massively in that time, 200%. And these people were sitting on the sidelines, sitting on their hands, waiting with their money, missing the whole rally. So I don't care if a recession comes. I'm not selling anything. And if a recession shows up, then I'll buy more. But I'm not banking on it. What about cybersecurity companies like Crowdsource? Crowdsource, I think, just had really good earnings, I think. But let me just double check. The stock, let's see here. Well, the article that I see is CrowdStrike surges as Wall Street sings praises and sees a path to $100 billion for market cap. Their current market cap is $79 billion. It's got a strong buy rating from most of the analysts. Their grades are fantastic. A for growth, A for profitability, A+ for momentum, A- for revisions. The only bad grade they have is evaluation. They're very overvalued, so they have an F. The stock is up 153% this year, or last year, I mean, and they have a 1-year price target of, let me see here, I'm also writing this down. They have a 1-year price target of 382, which is an 18% move from here. SPGI, let's take a look at S&P Global. It's $430 a share. They have a 1-year price target of 483. That's a 12.5% move. Of the 22 analysts who are covering it, 13 strong buys, 7 buys, 2 holds. So very strongly rated. Can you please do Celsius? I have checked my stock fight playlist. There's a video in there recently comparing Celsius to Monster Beverage, but you can just watch the Celsius part if you're interested in Celsius. Can you talk about DraftKings? Sorry if I missed it. We didn't actually talk about DraftKings. I own DraftKings. I bought it during COVID. I bought it during COVID when they started to announce that they were closing down all of the sports, like live sports, shut down, COVID, closing down sports, there's no sports. And I said, oh man, as soon as they open up the sports again, stock is going to go up. So I only bought it really for a COVID recovery kind of thing. And then it just really did very, very well. So I kept it. Thoughts on SoFi? Check my stock fight playlist. I just made a video on SoFi versus new holdings. It's a relatively new video, so everything you need to know about SoFi is in that playlist. PLTR, it's had a great run. It will continue to go up, but don't expect 100% every year. Absolutely, good point. Just because the stock went up 100% last year does not mean it will go up 100% next year or every year. Palantir, by the way, went up 224% last year. Year to date, they're up 56%. Their endeavor into AI is going to be huge for them. Their government contracts give me a lot of peace of mind. We talked about Palantir. Did we talk about Palantir? We might not have talked about Palantir. I don't have it on my list. I like Palantir. I think they're going to be fine. I think they're going to do very well long term. What will VOO year-to-date returns be for 2024? I don't know. I don't have a crystal ball. Thoughts on SACH? Never heard of it. Sachem Capital? Never heard of this company. It's $3.83. It's down 12% in the last 5 years. It's down 24% since going public in 2017. Sometimes a high dividend isn't everything. People look at this thing and they go, wow, it's $3 and it has an 11% dividend. That's crazy. And it pays quarterly. It pays 11 cents. I don't know. Something down this much in the last couple of years makes me not interested at all. Plus, it's a penny stock. I've never heard of this company. It operates a real estate finance company, originating, underwriting, and funding services, managing portfolio, short-term loans, blah, blah, blah. Interesting, but I don't know enough about it. Yes, we did NMD. We talked about it at the 31-minute mark. So I'm going to download this video. I'm going to post it on YouTube later today, and I'm going to timestamp everything. So MNMD was at the 31-minute mark. Thoughts on crypto ETFs? I think there's going to be a lot more crypto ETFs coming. Look, crypto is having their moment again. You got to be careful when you see stuff up this much. Usually by the time everyone is talking about it, it's too late. I don't know if that's going to be true this time because it seems like now these ETFs are starting to pile in. Bitcoin had a massive run ahead of the Bitcoin ETF getting approved. When it was approved, kind of fell flat for a minute. Now it's kind of moving again. I think it's moving for a couple reasons. Probably more hedge funds are starting to incorporate, or investments banks and whatever are starting to incorporate crypto into their portfolio, number one. Number two, let's see here. Number two, individual investors are piling back into crypto. Every other video I see on my For You page is crypto is back, crypto is back, crypto is back. People are asking me, should I buy the Bitcoin ETF or should I just buy Bitcoin? So people are really interested again. Any thoughts on Joby or Archer Aviation? We talked about Joby at the 37-minute mark of this live. I'm going to put it on YouTube. You can go back and find it there. Apple and Alphabet smashed. Is NVIDIA good? We've talked about NVIDIA at the very beginning of the live, so you'll have to go back on my YouTube channel. I'm sorry I'm itching my nose so much. We're dog sitting. I'm allergic to dogs. Are NVIDIA and Broadcom similar? I bought both. So Broadcom is a semiconductor company as well. It's I'm gonna round up. It's $1,400 a share. It's $13.93, but that's close enough to $1,400. It's up 120% last year. Year to date, it's up 25%. It offers a dividend as well, but it's a little higher than NVIDIA's. It's 1.56, but it's $1,300 a share. So 100 shares is going to cost you like almost $14,000. Very, very expensive stock. Their 1 year price target is $12.85. They've already smashed it. Their highest price target is $15.50, which, you know, the way semiconductors are going, they're going to lead the way forward in smart technology. I think it goes even higher from here. All right, everybody, I got to wrap this live up. I see that there are 99 other questions that I didn't get to. My most recent NVIDIA purchase was December of 2022 at $400. Any books? Yes, click on my link. I don't trade Forex. Click on my link here. There's a link tree. It'll take you to an Amazon storefront with some book recommendations that I have. What's your thoughts on SoFi? I've already talked about it. Favorite long-term halal index funds. Hey, Susan, I saw you. You left a comment on my video. I tagged two of my friends who make a lot of halal investing content, Amir and Nadar. They both make halal content for halal investments. I will work on a video for you. I actually had it up on my screen this morning. Let me see what I was able to find. We've found stuff like, so let's see here. I was reading up a little bit more about halal investing because I don't really know too much about it, but it says that it avoids investments such as gambling, alcohol, pork, or unethical industries. So I already have an ethical investing playlist, which you might find of interest. Whether those companies are halal or not, though, I'm not sure yet. There are some halal mutual funds, private equity groups, gold and precious metal. It says here, as long as it's as long as you're investing in gold and precious metals as a store of value and not speculative investing, then gold is also halal. There are also some Islamic saving accounts and Islamic banking products. And then last but not least, it says socially responsible companies that also align with Islamic principles might also be considered halal. So I'm going to work on a video for you, but also go and follow. I think it was his username is Halal Investor and Amir. J Dub says, I have 20,000 in my savings. What would be a good investment to start with? Check all my investing for beginners playlists. You're a legend. Keep up the great work. Thank you. Thoughts on SCHD? We've talked about SCHD. It's the highest rated dividend ETF on the market. I love it. Can you make a video on how to short a stock? Yes, there are videos in my covered call. I think at a time I had combined covered calls and shorting in one playlist. So I would go into that playlist and look for the how to short a stock video. Thoughts on private market investing? I don't really know too much about it. Thoughts on Nancy Pelosi's PanW? I could care less about what Nancy Pelosi is buying. I would not buy NVIDIA without a stop loss or a trailing stop. I like those a little bit better. All right, everybody, I got to wrap this live up. I'm very, very sorry if I'm not able to answer everyone's questions. I will answer the last one, though. How do you get a do your own research guide? Go on my website, click on the menu. My website is kennethsuna.com. It's just my first name, my last name. Click on the menu. You can find the free resource guide and all my other templates, and they are 100% free. I'm not hiding behind a Patreon or a subscription link or anything like that. It's all free. All right, everybody, if I didn't answer your questions, I will be live on Sunday at 9:30. I usually go live at 10, Tuesday, Thursdays, and Sundays. But this Sunday, we have plans at 11, and it's 11:04 already, so I would be late for my Sunday plans. So I'm going live this Sunday from 9:30 to 10:30 in the morning, and it is a harsh 10:30 cutoff. I'm not going to stay around and chat a little extra. If I didn't answer your question, you can always feel free to leave a comment on one of my videos. We talked about SoFi at the 30-minute mark on this live, which I will be putting on YouTube later today. All right, everybody, I got to go. Thanks for watching. Thanks for following if you're new. Also, if you're new, be warned, you're going to get a lot of scam Trade Invest Simplify copycat accounts following you and messaging you. None of them are me. I'll never DM you. I'll never follow you. So if you see me following you, block them, get rid of them. It's not me. Don't send them your money, please. Jeez, don't send them your money. All right. Hey, Amir, Susan, are you still in here? Wait, Amir, don't go anywhere. Damn it, Susan. I don't know if Susan's still in here. Well, Amir, the woman who was asking about halal investments that I tagged you in is in this live, or she was in the live. and I was telling her to follow you. So I don't know if she's still in here, but Amir, stock market coach, is the guy I was mentioning. He's also one of the smartest people I know. All right, everybody, got to wrap this live up. If I missed you, ask your questions some other time. I will be going live every Tuesday, Thursday, and Sunday. All right, everyone. Bye. Thanks, guys.